Hi everyone, so let's have a look at the next part of Learning AIM A, and there we've got the current accounts. Okay, so there's 4 different types of current accounts that you need to be aware of when it comes to different banking facilities that are available. Okay, so a current account, as you can see that I've highlighted in black here, is an account designed for frequent use, allowing daily inflows and outflows of cash to actually take place. So money will come in through wages, through salaries, but money will also come out of this account via direct debits or standing orders to electricity companies, gas companies, mobile providers, as well as perhaps rental arrangements and so on. Okay, now in this table I've drawn out the 4 main categories of current account that you need to be clear on, as well as the definitions and the advantages and disadvantages of each type. So let's get started firstly with a standard current account. So this is obviously a normal type of account which is going to be very appropriate for people with normal good credit rating. So if you've got good credit scores, then you're going to be able to get hold of a normal current account, and that will provide a variety of facilities for you. Okay, so advantages: there's no charge when it's in positive balance, so that is when it's in credit terms as it's known when it comes to your current account. That's not to say credit as in borrowed money that you've got to pay back in this sense, okay, and just be aware of that. Here we are talking credit as a positive bank account balance. Okay, it's going to offer debit card facilities as well as mobile banking and allow you to set up direct debits and standing orders as needed, really. It's therefore going to be highly convenient because your salary is likely to be paid straight into that via a banker's automated clearing service or a BACS payment. Okay, now there's going to be big overdraft charges should you go into negative bank balances though. So the interest payable on any overdrafts will be quite high. Now there's no further perks involved in this either. When we look at the premium one in just a second, we'll see that there are various advantages there. When it comes to an overdraft, this is simply allowing you to go into a negative bank balance, okay? And you can see I've put down a definition, full definition of what an overdraft is down here. Okay, so next one, premium package. Well, this offers additional features to a standard account. Examples here can be home insurance, car insurance, it could be about breakdown cover, it could be that your whole family is entitled to travel insurance there, as well as magazines, and there's a variety of things that could be included. Okay, once again it's convenient and there's additional benefits which may to some customers offer real value. Okay, so that can be the scenario there. If you're benefiting from home insurance and travel insurance, then you might be happy to actually pay, and yes, you do need to pay a fee for actually using this type of premium bank account. Yep, so there's a monthly charge, but of course you've got to be careful about balancing out the monthly charge with the actual benefits you're getting. So otherwise, how much would travel insurance, home insurance have actually costed you, and which would be beneficial there? Okay, then moving on to a basic type of current account. So this, in contrast to what we saw with the standard account, it really offers a rather limited range of features for those that have poor credit rating scores. So perhaps they've been declared bankrupt formally, where they've had that inability to actually repay their debts, and that's been legally declared. They would then only be entitled to a basic current account. So the good news about this is that at least those customers can actually access any form of banking facility, and that will help to start build up their credit score again, of course. Okay, now the big downside here is, of course, there's limited services actually being provided. You're not going to get a debit card, okay? You won't get a checkbook, and there's no chance of getting an overdraft facility on this account either. Okay, right, so then let's take a look at a student account. So of course this is highly appropriate for anyone going off to university, and it's designed to meet the needs of those students in particular. As such, it usually offers interest-free overdrafts, okay, and other incentives. So yeah, do check out what incentives are actually being offered by the different bank account providers. Some of those incentives might include, for instance, a rail card for 3 years while you're actually at university. Getting a rail card for that time period is obviously very beneficial, because it's gives you the chance to actually save on transportation costs while you're at uni. It also allows course fees to be deducted from that bank account, and your student loan payments to actually go into that bank account. Of course, your student loan repayments won't actually take place until after you've graduated and are working. Okay, but nevertheless, it enables the student loan to be paid in to your bank account here. The downsides are that if you do have an interest-free overdraft, well, it may encourage overspending here. And further to that, charges for overspending are pretty high. Okay, so there we go. Those are the big or the main types of current account that you need to be really clear on here. There's a good chance this will come up in your exam, so make sure you revise this area and you really prepare for a sort of 6 or an 8 mark question on current accounts. Okay, thanks a lot, guys.